Well, to get a better understanding of these figures, we're joined now by the lead economist at KPMG, Frank Blackmore. Frank, good afternoon to you. If you consider how this quarter started, the floods in KZN over Easter, and then how the quarter ended, stage 6 load shedding, I suppose it's no surprise the economy contracted slightly.
I think you're right, Stephen. There's no surprise here. I think the biggest issue affecting the economy over this period has been load shedding, where half the days, the business days, were affected by some sort of load shedding somewhere. And then if you add to that, as you mentioned, the increase in costs, fuel prices, food, and the knock-on effects onto inflation and obviously the increases in interest rates, that just subdues other expenditure in the economy as well. So no surprises there. It was just a matter of how bad the news would be for this quarter.
You mentioned all the things that are happening domestically, happening here, but this is also about what's happening around the world. China going under lockdown again, or 35 million people under a semi-lockdown again today, but there's a series of lockdowns there that affects their industry and their economy, which affects ours. Europe obviously hugely affected by the war in Ukraine.
Absolutely. I think one of the biggest disruptors to the global supply chains has been China's zero COVID policy, where they closed down their port cities with any sign of COVID. And that has trickled globally and obviously been augmented or sort of increased that negative effect by the war in Ukraine, both from the energy perspective, which has affected us as well through the prices, but also through food markets. They're the biggest producer of wheat, with Ukraine second biggest. Other things like fertilizer, of course, cooking oil as well. We've seen huge increases in that in our CPI as well, and that's those sort of products are quite broad as far as the economy is concerned. You can't do anything without either using fuel or food, and therefore we see the current level of inflation at 7.8% for the previous month as a result.
What's inflation going to be doing in the future? And I realize, Frank, this is a very complicated question. We do expect more interest rates to come. We expect more interest rate increases to come, I should say. Some people have suggested that inflation may well have peaked in South Africa, a lot lower than in some other places. Do you buy that?
Yes, I think that is the case. If you look at the dollar prices for some of the food items, cereals, etc., they're nearly back to the levels they were prior to the conflict in Ukraine. But of course, we don't buy those goods with rands. We need to convert it into dollars, and that's where we still have pressure. The exchange rate obviously has decreased around, 15% this year. And that means these goods are still more expensive for us to pay. I do see us reaching the upper limit. We can see that with the oil price, currently around $93 for Brent. That's come way down from the 120, 110 that we saw earlier in the year. And that will trickle through to the economy in a slowdown of inflation. But even if the monthly increases are smaller, we're still going to remain way above the Reserve Bank's upper limit in the 7.5% for this year.
Still very high. What are you expecting to happen to growth in the third quarter? Obviously, there'll be a question around whether we will have a second quarter of contraction and therefore a technical recession. We're more than halfway through the quarter as it happens. Possible to make any predictions at this stage?
I don't think that's too likely, given that last year, remember, the country experienced the social unrest in KZN and parts of Gauteng. And that's created a very low base on which we would be growing in the third quarter. But of course, any positive we could get from that respect would be negated by the negatives, as we've spoken today, of higher prices and people having tighter budgets.
There's a lot of questions, of course, around what needs to be done to get our economy growing again. And Frank, the conversation around economic reform has been going on. Well, it's probably been going on for longer than I've been alive, frankly. I don't know if we're really going to expect any new major reforms, but the President has announced changes to electricity, for example. There's more pressure to get things like Transnet working again. Do you expect that to have an impact?
I do, but with a lag. So I think it was very important. One of the major issues that we had highlighted is the liberation of the energy markets to a degree. We have made steps in that direction. There's still more to go, of course, as far as the implementation of these changes are concerned. But if we saw the main driver of the economic growth in the first quarter was manufacturing, and manufacturing this quarter has contracted by 6%. You can't manufacture without electricity. And therefore, if companies that do manufacture are able to get that electricity supply, we should see some strength coming into the economy at some point. But obviously, investments of this nature, due to their size and also cost, take quite a while to implement. And so we're talking months here, if not years, before the positive impacts of those policies start coming through.
Frank Blackmore, thank you, lead economist at KPMG. Really do appreciate it.